Pues buenas tardes a todos. Un placer nuevamente que se conecten el día de hoy para este webinar. La verdad es que estamos muy contentos. Me presento antes que nada. Mi nombre es Alejandro Bárcenas, para quien todavía por ahí no me ubica. Soy director ejecutivo de ASESCO, de la Asociación de la Industria de Centros de Servicios Compartidos en México. Y como les mencionaba al inicio, la verdad es que estamos muy contentos nuevamente de volver a generar otro evento más con todos ustedes. También contentos porque estamos creciendo esta gran comunidad. Por ahí se están incorporando 2, 3 socios más. Muy pronto por ahí les mandaremos también correíto para que también los conozcan. A su vez también estamos creciendo con socios estratégicos. El día de hoy precisamente nos apoya RGP, un nuevo socio con quien vamos a estar colaborando seguramente hacia adelante en el futuro. Y muy interesante lo que vamos a estar viendo el día de hoy. Agradezco de entrada, Emilio, Gustavo, por todo este tiempo y la colaboración. Primero que nada, por conocernos y también por empezar a trabajar durante este tiempo para platicar del tema, para platicar de la dinámica del día de hoy y un poco también introducir lo que ustedes vienen haciendo dentro de esta gran industria. Y la verdad es que estamos seguros que más adelante vamos a tener bastante buena participación con ustedes, seguramente con más eventos y con más información y más apoyo hacia toda la parte de ASESCO y a todos los socios que el día de hoy conforman este gran grupo. Entonces, pues gracias por el apoyo nuevamente de antemano y sin más ni más, pues doy preámbulo para que arranquemos y aprovechemos el tiempo. Como siempre, les agradecemos el participar el día de hoy, no solamente en escuchar todos los insights y todo lo que vamos a estar platicando, sino también, como siempre, pregunten, cuestionen todo lo que a ustedes les interese y seguramente va a ser algo muy interesante para todos ustedes. Entonces, muchísimas gracias. Sin más ni más, Emilio, te cedo
Muchas
la palabra.
gracias. Gracias, Alejandro. Buenas tardes a todos. Mi
Gracias.
nombre es Emilio Castellanos, soy director senior comercial para México y Latinoamérica aquí en RGP. Les explico en 30 segundos quiénes somos. RGP es una firma pública americana que cotiza en Nasdaq. Tenemos presencia en 38 países con más de 60 oficinas. Trabajamos con el 88% de las Fortune 100, básicamente en tres tipos de servicios o tres verticales. La primera es talento bajo demanda. Ponemos ejecutivos para llevar a cabo las actividades del día a día de posiciones mid management hasta arriba, hasta C-level, así como el segundo pilar es lo que es ejecución de proyecto. Eh, Proponemos consultores subject matter experts que se integran como parte de tu equipo de trabajo para ayudarte a ejecutar proyectos que decides tercerizarlos al 100% o que los tienes tú como responsable y necesitas más manos para poder ayudarlos a ejecutar. Y por último, el tema de consultoría es consultoría end-to-end con nuestras propias metodologías, entregables, etcétera, etcétera, ¿no? Dentro de todos estos tres servicios nos movemos en 6 áreas, 7 áreas específicas, lo que es contabilidad y finanzas, lo que es cadena de suministro, lo que es recursos humanos, lo que es IT o tecnología y digital, lo que es experiencia de cliente o UX, centros de servicios compartidos, project managers y change managers. Voy a hacer algunos anuncios parroquiales antes de que empecemos la presentación. La presentación está en inglés. Sin embargo, cuando terminemos la misma, les vamos a enviar la presentación en español. Nuestros panelistas, Gustavo y Tim, van a hacer la misma en inglés. Para aquellos que se sientan más cómodos, pueden darle clic al closed caption, a los subtítulos, y van a poder leer lo que ellos están expresando en inglés, no en español. El chat va a permanecer abierto para cualquier pregunta y pregunta que ustedes lleguen a tener, los vamos a leer y al final de la presentación vamos a buscar responder las preguntas que podamos por el tiempo y en caso que no nos dé tiempo, que no nos dé ese espacio, les vamos a enviar la respuesta de manera individual a sus correos. That's it. Can we move to the next slide, please? Bueno, me toca presentar a Gustavo y a Tim Tickle. Bob Jorques es un ejecutivo senior y consultor estratégico con más de 35 años de experiencia liderando iniciativas de transformación empresarial en América Latina. Gustavo se encuentra especializado en estrategia, transformación digital, datos y analítica, centros de servicios compartidos o GBS, así como excelencia operacional. Gustavo ha desempeñado un papel clave en el diseño e implementación de diversos centros de servicios compartidos en México y ha liderado importantes programas de transformación en empresas líderes. Actualmente se desempeña como vicepresidente de servicios de consultoría para México y América Latina aquí en RGP. Anteriormente ocupó cargos directivos en MetLife, PwC, EY, IBM, Deloitte y Bearing Point. Gustavo es ingeniero industrial, cuenta con estudios de posgrado en finanzas y así como múltiples diplomados ejecutivos, incluyendo marketing digital, seguros, perdón, y es consejero independiente con una certificación como PM y Scrum Master. Tim Tico es un profesional financiero con más de 25 años de trayectoria comprobada, logrando reducciones significativas de costos mediante el rediseño innovador de procesos financieros, la implementación de técnicas de automatización global y la optimización de procesos existentes. Tim tiene experiencia en el desarrollo de procesos financieros globales, la transición de servicios compartidos hacia modelos de servicios empresariales globales, GBS, por sus siglas en inglés, y en liderar iniciativas de transformación a nivel global en diversos sectores industriales. Antes de unirse a RGP, Tim trabajó más de 10 años en Cummins, ocupando diversos cargos ejecutivos, incluyendo director de controles internos y desarrollo, director de excelencia funcional financiera para servicios compartidos para Asia-Pacífico, líder de integración financiera, separación de negocios para estrategia corporativa, M&A, y más recientemente lideró la iniciativa global de transformación financiera en contabilidad de intercompañías como director global de transformación de intercompañías también. Can we move to the next slide, please? Esta es parte de la agenda. El inciso A es la introducción de los panelistas y de quién es RGP de manera general. Hablaremos sobre las tendencias en materia de GBS, centros de servicios compartidos. Pondremos un caso práctico relacionado con transformación de intercompañías. Después de eso, la presentación per se del tema en comento. Y al final, como les comenté, vamos a responder las preguntas que ustedes nos hagan favor de escribir en el chat. Y básicamente es eso. Next slide, please. Nicole, Ellen, can we move to the next slide?
Yeah, we have it. We may have a delay, Emilio, but
Okay. Bien. Comportamiento, compartiremos nuestra perspectiva sobre transformación en GBS y centros de servicios compartidos. Usaremos los procesos intercompañías como un caso práctico para mostrar cómo las organizaciones líderes liberan recursos, mejoran el cumplimiento y crean valor medible. Todo esto mientras se mantienen enfocados en los resultados del negocio, ¿no? El objetivo 1 es presentar las tendencias actuales, enfoques y desafíos para la transformación financiera en un GBS o un centro de servicios compartidos, así como el impacto de la automatización y la inteligencia artificial en las actividades comunes de transformación financiera. El objetivo 2 es hablarles del por qué los procesos de intercompañía están siendo objeto de transformación en muchas organizaciones líderes, así como hablaremos sobre sobre el valor de la transformación de intercompañías y cómo desarrollar un business case para lograr este objetivo. Y finalmente, como objetivo 3, compartiremos estrategias prácticas para iniciar un proceso de transformación, así como quién deberá estar involucrado dentro de la organización. Next slide, por favor. Bueno, esta es una pequeña encuesta para que nos apoyen en responder. La pregunta es, ¿cuál es la principal prioridad de tu empresa en la evolución de tu modelo de centros de servicios compartidos? La opción A es lograr una eficiencia en costo y con escalabilidad. Inciso B, mejorar la calidad y confiabilidad del servicio. Inciso C, expandir el alcance de los servicios. E inciso D, aprovechar las herramientas digitales como la automatización y la inteligencia artificial. Por favor, si nos pueden ayudar en contestar cuál de esas es la principal prioridad en su empresa para la evolución de su modelo de Shared Service Center. Y unos 10 segundos más. 10 more seconds, please, Ellen and Nicole. Ok, bueno, el resultado, el que más ganó puntos es el inciso B, el cual es aprovechar las herramientas digitales como la automatización y la inteligencia artificial, seguido por lograr eficiencia en costos con escalabilidad. Y como tercer lugar, mejor la calidad y confiabilidad del servicio. Y lo que menos les interesa, por lo menos a la mayoría, es expandir el alcance de los servicios. Muchas gracias. Le paso la palabra a Gustavo Borges.
Gracias, Emilio, y gracias a todos. Primero que todo, a Alejandro y al equipo de ASESCO, muchas gracias por la invitación a participar de este webinar desde mí como persona y de RGP. Me da también mucho gusto estar con este grupo tan nutrido de profesionales para hablar de este tema que es muy interesante. Voy a cambiar a inglés porque vamos a tener algunas interacciones con Teams. So from now, I will present in English. And we will start talking about what we are seeing as a global trend in the shared services centers and the global business services organization. So one of the things, and it's curious, the result of this first survey when you are focused on AI, that is clearly one of the trends, but also second on cost. That the cost is keep being one of the most critical objective of the shared services centers. However, what we have seen, and we will see in the following slides, we are seeing a shift from transactional efficiency to more, let's say, strategic enablement activities in the global business services and shared services centers. And we will see some examples in the following slides. If we move to the next slide, please. So the first things is, as I mentioned, what we are seeing is a shift from transactional efficiency, that is where really the shared services center born several years ago, when the idea was how to reduce the cost per transaction on transactions that were common for the organization, etc. Then we included process automation, then intelligent automation and strategic enablement. And now what we are seeing on the strategic enablement side is, and I will give you some examples. For example, global business services organizations around the implementation of artificial intelligence technologies to leverage the information they have from the finance transactions to improve forecasting, for example, to improve risk identifications in the cash flow that can also help companies to, for example, achieve improvement in working capital up to 50% is what we are seeing. So that's the first thing we are seeing. Then also organization moving to experience agility and innovation, and it implies working on the implementation on these new technologies that helps the organizations to leverage all the information you are processing every day to be able to add value to the business also from other perspectives. So if we move to the next slide, please. Then on this slide, what I would like to emphasize is maybe the numbers that are on the right, what you are seeing. Transformation keeps being a challenging effort in the organization. So, and you will see here from numbers from Gartner and other analysts. So 14%, according to the Gartner research in this matter, 14% of the leaders are saying that the transformation efforts in the finance organization and the shared services are successfully, so 14%. But in the other hand, 70% of those same leaders are saying that the transformation is not progressing at the pace that they expected. So the results are arriving slowly in the organization. So we have those two perspectives. Also, according to Shared Services Link, 93% of the companies now are working on automation in the finance organizations. And according to Alexis, 90% of the top performing GBS and shared services organizations are implementing artificial intelligence centers of excellence. And it has been very good for them because it is enabling them to go beyond the cost per transaction. So we will see in the coming slides also some examples, and team will talk about specific details about that. For the next slide, please. Now, what leading organizations, GBS organizations are doing. So I will emphasize three key messages that you will see in the slide. First, they are thinking now more enterprise-wide, from a more enterprise-wide perspective, identifying what are the business metrics that they can also impact positively, and not just, again, the cost per transaction. Second, they are connecting the technology, the people, and the processes to be able to generate those benefits. And finally, redefining the performance. So from service level agreements to other concepts of more business value oriented, for example, enterprise level, experience level agreements, and agility and innovation. So those are three main topics that we are seeing in these organizations. If we move to the next one, please. Then here, team will start talking about specific topics about artificial intelligence and automation. So team, please go ahead. Thank you.
Thanks, Gustavo, and good afternoon, everybody. I want to start this. When we kind of scale back on the GBS transformation that's going on, I wanted to kind of look at more dive in depth at what we're seeing in the AI and automation space. I think most of our organizations that we're working with are first looking to their ERP systems and what is baked into their systems as far as AI and intelligence in that space. And so if you're looking at your financial cycles, procure to pay, there's a number of AI, machine learning, and RPA type of advances in the ERP systems that are actually introducing that automation actually in the ERP. But we also see a plethora of platforms that also sit on top of your ERP that can also provide some of this automation. When we think about, scanning invoices and having them loaded into the system systematically, that's an example of an older technology that's becoming more prevalent and expanding in the procure to pay space. Again, kind of moving towards that touchless back office feel. In the record to report space, we're seeing, again, leveraging as much as we can within the ERP space, but a lot of organizations are looking to outside platforms to introduce AI in this space, specifically around account reconciliations. A lot of the major tools and platforms in the account reconciliation space have introduced AI and are continuing to introduce AI in that space to simplify and to reduce the amount of manual effort that's going into that process. And then lastly, in the order to cash space, we're seeing more and more expansion and use of AI in the matching of cash applications, as well as partial payments on invoices, et cetera, and leveraging AI to build out some of that. And again, moving more towards leveraging technology to do the things that we had done in the past so that we can focus more on the results of the transactions and more of that strategic enablement that Gustavo was talking about. Next. What we're seeing as it relates to kind of on the global scale is that there is kind of more of a shift as it looks on the global organizations that are in the shared service space. And many of them are looking, either the newer entities that are getting into the shared service space, they are more I guess more prevalently, looking to stay close to home. So in the past, there had been a large, I guess, migration to east into India and some of the lower cost markets out there to set up those low cost centers. But what that labor arbitrage that would originally had been seen in that is somewhat slowed. And what we're seeing is that the Latin American countries are actually becoming very competitive that, as well as the actual workforce development that's being done in the area. And so what we're seeing is either these new organizations looking at a stay-at-home trend, or we're looking at some type of a nearshore adoption where maybe they have a major center in the US, but they're looking to expand that by having something nearshore. And then lastly, we are seeing some work shifting back from Asia Pacific into these Latin American regions. And so it's expanding the opportunities for shared services in the area. Next. One other area that we're seeing a large uptick in is in this concept of what is called global process ownership. And I'll start in this discussion looking at the metrics on the right. In the upper right-hand corner, you'll see that 5 years ago, only about 40% of the top GBS organizations were using what we're calling global process ownership. Fast forward 5 years later, and you'll see to the left there, we are now seeing that 70% of the top GBS and top performing SSCs are leveraging this model. And what we're finding is that this is improving and connecting the operation of the business to our GPO strategies. So we're actually becoming structured and actually performing this under a global umbrella. And lastly, we're prioritizing standardization and an integration across the globe, and what that does promote within the shared service space. The more you standardize and the more you're integrated, you can then look at this process of global process ownership, where you're setting the standard for the process globally. And how it is going to process. Now, there is regional variability to that process, but again, across the shared service environment, they are going to process from A to Z, theoretically across the same process. And that enables us to now manage one common process around the world, which means that if we have to improve it, we only improve one process instead of 10 processes that may be out there. And it also gives us greater control so that we can also begin to see where we are doing things good and where we are not. Some service centers may be not performing as well as others. And if they're all operating on the same processes and expectations, then we can now accurately measure them. Next. So lastly, let's take a look at why most transformations fail as you can see, many of these have remained static for probably the last 15 years. Poor data quality, technology itself, people resisting change. That has been a problem since the beginning of time. Poor process standardization. But what we're seeing now is the inclusion of more people-oriented failure points. So, making sure that we are looking at this and involving the people in the process of the transformation and making sure that we understand the changes that we're asking of our employees as we deliver transformation, and making sure that they are fully and adequately prepared for that. So again, these are not necessarily new. What it is we as organizations have to be better at how we are solving for these challenges. So as we move forward, I think we'll take a step now, and let's take a pulse check of everybody here, and let's find out what is the biggest challenge to your organization that you have in managing those intercompany processes. The challenges that we have laid out are the first: A, manual effort and lack of automation; B, data quality and reconciliation issues; C, compliance with tax and regulatory requirements; D, timeliness of close and consolidation; and lastly, E, disputes and lack of transparency across entities. We'll wait about 30 seconds for everyone to answer. 10 more seconds. Well, thank you for your void, and cost is also one there that I saw that in the chat, and it definitely is a challenge. And I think what I wanted to highlight with this question is that, typically when I go out and speak with shared service organizations, they're very quick to point out the challenges they have in their procure to pay and record to report or order to cash cycles, but they're not real quick to talk about intercompany. And as you can see here, there are challenges across the board. And I think that as an organization, we are sometimes afraid to think of intercompany because it doesn't really impact anything. But what I want to challenge the audience today is to take a different perspective on that. So let's go to the next section, please. So let's make this case for intercompany transformation. And as I alluded to in the previous poll question, 4Q and Dimensional Research recently did a couple of surveys, and what they found is basically identically about nearly all companies report problems with their intercompany processes. And nearly all of them say that it's negatively impacting their business. So again, why are we not addressing the 800-pound elephant in the room? And the challenge becomes, how do we make that case, right? So let's go to the next slide. I'll begin this with a story. And this is a real life story that I encountered in my career. And working at a Fortune 50 company, we were managing our intercompany processes across the globe through our shared service centers by having our entities call in their AR and AP transactions to the shared service center. And the shared service center was manually matching those transactions back and forth in a manual process every month. And as a result of that, as you can imagine, there are out of balances were growing. Now, as a business itself, unique to our business was that for every invoice that we sent to an external customer, we would generate 2 internal invoices just to move product around to get it to the customer. So 2/3 of our volume related to intercompany, but only 1/3 of it was actually kind of being visible. So as you can imagine, at the C-suite level, they're very interested on those transformation efforts that are going to grow our top line. What's going to give us more revenue? What's going to improve our gross margin? How do we make a case for a broken process like this where we don't necessarily have value that we can point to, a bigger revenue number or a bigger gross margin number? So let's take it to the next step. So what I will challenge all of you today is that, intercompany uniquely positions itself for transformation. So if we think about, it is the only process within shared service that we own 100% of the process, the technology, and the policy. So in order for us, we manage all the variables associated with the transformation. In most other transformation efforts, we're usually involving some type of third party and asking them to help us improve our processes, whether it be procure to pay process with our extender suppliers or O2C processes with our customers. But in this case, we are doing business with ourselves in intercompany, and we define that, and we should be able to set the rules. At the end of the day, if we want to be competitive, we cannot be spending a significant amount of time, energy, and money on these intercompany processes because they do not provide value to shareholders. So let's go to the next slide. So how did we, look at building that case for change, and how did we unlock the value that was really out there? Well, in our case, we looked at it from a couple of different ways. First of all, labor-wise, we embarked on a global transformation survey, and what we had noted was that there was information out in the market that had told us that said if we could automate this process, we could see up to a 75% reduction in the number of people it takes to do our intercompany processes. And we also know that that there's approximately $1 million to $2 million of potential cost savings within our business, in a $10 billion business, that around just poor performing intercompany processes. So we have a couple of different ways we can look at trying to understand how much intercompany is impacting my business. So what did we do in this situation? I'm sorry, Gustavo, did you have a question?
Sorry, Tim, just a question, and we may discuss this before when we preparing the webinar.
Sure.
It's this process and how that we are seeing the levers we have to build the case for change. Those looks very cost efficiency oriented. But also we are saying, and what we are seeing is that also the GBS organization are migrating from cost efficiency to strategic enablement. So how do you see these transformation efforts in that new scenario?
Well, this is actually right in line with that scenario, Gustavo, because again, the idea here wasn't that we were going into this exercise as a cost-saving exercise. The fact was we could not manage the volume. And so it was more about how do we enable the organization to manage intercompany growth going forward. It was going to fall on its face. So it was more strategic. How do we free up our finance employees to do the work that actually does increase revenue and that does increase gross margin? Instead, we had a bunch of people not doing that. And so this is a strategic enablement exercise. But good question.
Again, and I would imagine also that some of those people can be also can also put focus in more value-added activities in the shared service center, rather than just processing the AP and AR transaction that they are receiving every month.
Exactly, I agree, and I think that on a subsequent slide here, I'll talk about the results of what we found in my exercise. But it is definitely we have to the exercise that we uncovered was first we had to identify where the value was, because that was going to be our budget for how we changed it, right? So we had to see where we thought we could provide that value, and so unlocking this value is critical to securing the C-suite support that we needed to have the budget.
Great.
Next slide. So as we embarked on this exercise, I think the one thing about intercompany transformation, as I mentioned, we own the entire process, which means we can define the rules. We can go in there and standardize how we're going to do business with one another. We can set expectations on internal receipts if there is material that's moving from one plant to another. We can set requirements on disputes, when we're going to allow intercompany disputes with one another. If we're going to, we can also assign materiality to it. So there's all kinds of different ways where we can make sure that everybody is playing by the same set of rules before we get started. Next, we can make sure to involve the right people. As I mentioned, most organizations don't just have an intercompany accounting group. They are typically embedded in a number of different groups, and they cross a number of different groups within an organization. And so when you're looking at transformation in intercompany, it's important to involve those right people. So in this case, corporate accounting, treasury, shared services, procurement, you've got tax, policy leaders. All of these people are going to play a particular part in that end-to-end intercompany transformation, and bringing those people to the table as part of the solution, as part of the development of what the future state is going to be, will increase your buy-in in the long term. Next, on the tech and data side, this is what is spurring a lot of the work that's being done in intercompany today. The technology has come to a point where we can now lever the technology to virtually automate 100% of the intercompany accounting processes within our organizations, because the technology can lever relationship building within the technology to identify that when I sell product to this other entity, I know the correct general ledger accounts to book all the transactions on both ledgers. And so through that technology, we have the ability to greatly reduce the amount of manual effort that's associated with this. Now, with that comes a greater reliance on master data. And so as you prepare for transformation in this space, there will be a significant amount of work in that master data space. And I'll talk more about that as we move forward. And lastly, again, as we look at intercompany processes, it's important to think about this from a standardized process. In my experience in the past, we developed a global process. And then we went around the world and we asked the various regions why they couldn't do it that way. And there was, as you can imagine, a lot of pushback. But in most cases, most of that pushback was just resistance to change. And it was not grounded in either legal or regulatory regulations. And so by going out and actually pushing that out, we were able to standardize the process globally, develop a GPO around it, and then we could manage it on a global scale. So this global comprehensive approach was not something that was done overnight. So this whole approach took place over about 5 years. So intercompany transformation on a global scale can be a very comprehensive and complex subject. Next topic. Master data, I'm not going to speak about this slide right now in the essence of time. I'm going to go to the next one because it does cover a little bit of this concept. And again, this is getting back to the tech that's involved in intercompany. As I mentioned, we are now going to, since we do know 100% of everything that's going on with intercompany within our organization, we can go in and define what most of these technologies call trading relationship. And a trading relationship is just a structured relationship between two legal entities that defines how they do business with one another. So if I've got 30 intercompany or 30 different entities within my organization, it's basically going in there and just saying, okay, in our current environment, A sells to B, B sells to C, D buys from A, and it's a matter of just laying all of that out at a very granular level and understanding what those relationships are, because then those relationships get ingested into the ERP system so that they can manage and automate the transactions that are flowing between those trading relationships. Two things on the back end of this. If you're not considering the netting and the settlement component of this, you're not thinking about it holistically, because there's a significant amount of value that can be driven on the back end of this when you incorporate the netting component to the program and making sure that you're settling things in the most efficient and effective way across your relationships. And that becomes a significant win for the organization. Next. Lastly, as I mentioned briefly, this sets the stage for global process ownership. And there's a number of things on this slide that we can begin to introduce to the organization, such as end-to-end accountability and applying some global governance and control. Lastly, we can begin to measure our shared service centers against each other. One of the challenges that most organizations have is if they're operating on different platforms or different processes, how do I know that shared service center A is doing as well as shared service center B? And many times we need to understand that, because in order for us to be the most efficient for our customers, our business, then we have to be the most efficient with we have to manage our own processes. Next. So let's take a quick poll here, and let's say what would you anticipate would provide more value to your business if the intercompany was improved? Would it be to increase or to give you a faster close, or would it be to reduce some compliance risk and to provide some or C, cost efficiencies and have fewer disputes? D, to have greater transparency and real-time insights, or D, to enable GBS to shift focus to higher value activities? We'll wait about another 15 or so seconds. And I appreciate that there are probably more selections than this, so try and pick the one that fits the best. All right. So I think what we're seeing in these results, and I don't know if Gustavo, if you have any ideas, but I think that the fact that we're seeing the enabling GBS and greater transparency adding up to almost 50% of the participants, that's indicative of what we're seeing is that people are trying to improve that strategic enablement component of this, and they've moved
Yes.
away from the transactional components of this. And I think that's a good thought process to be in. Gustavo, any
Yes,
thoughts?
and we just talk about it when I made you the question is the shifting from just transactional to more value-added activities is key now. So I think it's in line with what we have discussed and maybe in line with what you will explain later in the for how to approach this.
Great. Well, let's keep going in the essence of time. I want to make sure we get through this. So, obviously, I want to spend a second to talk about how to get started and how I got started. Again, getting started is sometimes the hardest part, but in most cases, the hardest part is getting that budget, right? And making sure that we secure that budget. And then from there, making sure that we involve the right people and that we think of this as a comprehensive solution. So if we move to the next slide, let's kind of revisit that story where we were at. And so how did I go about getting the budget? And as I mentioned, there were a couple of ways that I could have gone about doing this, whether it be labor cost or transaction cost. But we chose to do a global survey of our finance staff. And so in this case, we set up a survey and we wanted to understand what our finance people were doing on a monthly basis, very granular. And we captured all of that information. And what we found is that 25% of our workforce, of our finance workforce, was doing nothing but intercompany work. So this was about 500 out of 2,000 employees. We're doing nothing but intercompany work, which when we then turn around and say, okay, what does that tell us? Well, it means we're paying 500 people to do work that adds up to zero at the end of the month. And so that gave us a basis to then begin to go back to the C-suite. So let's go to the next slide. So how did we secure that budget? We identified that 25% in labor that was out there. And again, using that standard statistic of a 75% FTE reduction, we could take that 500 and move it down to about 125. So a 375 full-time equivalent headcount reduction. That's a significant value to the organization. We also saw that there was a significant amount of hidden cost in our settlement processes that because of the poor back-end processes that were incurring greater than $1 million of just transaction and currency fees. So that became the basis for the budget, the initial budget for our kicking off. So let's go to the next slide. So what did we do after that? So as you can imagine, this was a 5-year journey that we went on, beginning with starting with that labor survey, but then going into a number of different, very granular exercises to take a very comprehensive approach. I think the build component of the process and understanding it and making sure that we had the process right, it probably took 2.5 years on a global scale to make sure that we had developed a process that was going to work. And then over the next 2.5 years, we went about a process of proving that. And I'm happy to tell you that they're continuing to move on that process and implement that process today. So there is a number of different exercises to get going. And again, the idea here is that how do you eat an elephant is one bite at a time. And so the idea is for me, I needed to get the budget from my C-suite to make sure that I could do this. And then once I did that, taking a very comprehensive approach just so I could make sure that at the end of the day, when we were done transforming, we could remeasure and we could actually demonstrate that we got the value that we presented at the very beginning. All right, next slide. So we talked about some of the pitfalls just in overall transformation. I will tell you, these are what we encountered along that trail. The complexity of intercompany on a global scale is very complex. Every organization, there's transfer pricing, tax, regulation, customs, all kinds of things that have to be dealt with. And so just understand that ahead of time. Without a clear ownership of the process and ownership and sponsorship from the C-suite, it's very difficult to transform. So making sure that you're getting that buy-in at the C-suite and that there is a clear line of ownership and governance throughout the transformation. Some other areas that, not understanding the impact of poor master data. Again, that trading relationship is based upon that master data. So understanding that we have to, at a foundation level, be in good state with our data in order to undergo this exercise. Inconsistent policies, we do have to look at what we're telling our businesses, how they should be doing work. And if we're not telling them how to do it right, we should be doing that in our policies. So it's a matter of looking at that also. The last few items there, automating processes, no standard settlement. Again, not looking at the back office and not looking at this comprehensively. These are the areas that we encountered issues. So let's go on to the next slide. So I hopefully, we've demonstrated through this intercompany transformation project and example how, this can be you can unlock a significant amount of value for your organization because of some of the unique characteristics of the intercompany process itself. So if we can go to the next slide, I think that we can say that the value is undeniable in intercompany. And again, it's one of those areas where I think that as the statistics bore out, nearly everybody has a problem with it. They just don't like to talk about it because they don't have a way of demonstrating why fixing it will provide value. I think that we've made the case today that there is significant value there, and it can also be the stepping off point for introducing new concepts such as global process ownership and some of the global governance concepts associated with that. So it's an extremely valuable exercise. It's one that we own everything about, so we don't necessarily have to rely on third parties to be successful. So I hope that this has been a good journey through intercompany transformation as it results. And at this point, I'll turn it over to Gustavo so he can finalize and ask one final question.
Thank you, Tim. Next, please. So we have a final question for you. And also, please, if you have any question or comment, you can use the chat, please. So this final question is about what will be the most valuable next step after this webinar. So after you see this, and depending on the reality of in your organization, what will be the next step? So A, a tailored assessment of a current intercompany process. B, a business case to quantify the benefits. C, a discussion of enabling technologies, automation, artificial intelligence, intercompany platforms, or no immediate next step as the final option. So please think on it. We will give some seconds, 10, 15 seconds, and then we can talk about the results. Mientras terminamos la encuesta, tenemos todavía unos minutos que hemos dejado al final para preguntas y respuestas o comentarios. Por favor, cualquier comentario o pregunta es bienvenida en el chat. So I think we can now close the poll. I think the most relevant one, I think more than the half, is a discussion of enabled technologies, artificial intelligence, intercompany platforms, and automation is the most interesting topic for you. So that's good. And Alejandro, I think we can also support you and to have those discussions. We have worked a lot on those implementations recently. Then a business case for quantify the benefits is the second one. and then the assessment and the not immediate steps. So I think clearly the interest of this group is to have a discussion of enabling technologies on how to leverage those for improving these processes. So Emilio, if you like, we can go to the next one.
Bueno, no tenemos más que una pregunta que ya la respondió Tim. Entonces, bueno, nada más recordarles que les enviaremos la presentación en español tan pronto como sea posible y agradecerles mucho, mucho su tiempo por estar con nosotros. ¿Es todo, Alejandro?
Alejandro, no sé si...
No, pues Emilio, Gustavo, muchísimas gracias por el apoyo, team. Thank you very much. We
Gracias.
appreciate your insight. Thank you very much. Y pues nada, como bien mencionas, Gustavo, Emilio, cualquier duda, por ahí ya tienen los datos. La presentación se les haremos llegar. Digo, el tiempo, como siempre, corre demasiado rápido y a veces no nos da como para continuar y seguir escuchando, pero seguramente sí. Muchísimas gracias por el apoyo y seguramente por ahí estaremos coordinándonos nuevamente para más adelante seguir trabajando juntos y colaborando. Y gracias a todos los que se estuvieron conectando el día de hoy. Estaremos por ahí enviándoles pronto las siguientes invitaciones para los eventos. Y pues buena tarde para todos. Muchas gracias. Gracias, Mirio. Gracias,
Muchas
Gustavo.
gracias a todos.
Gracias.
Gracias.
Hasta luego.